My first silver purchase, my first significant silver purchase was with Schiff Gold. It was a
Yeah,
bag of
I
junk silver in 2012 for I think the spot was around 26. Maybe I got the coins for a small premium. I think it was like $27. And I was down for like 10 years until recently when everything just blew up in a good way. And now we're in a correction again. So Peter, how you doing?
I'm doing well. Yeah, silver did have a huge run. It went from $30 up to about 120 in just a few short months. And now people are scared because it's back around 60. But the key to silver is that it broke through the $50 resistance that had really controlled the market since 1980. And it turned back the 2011 rally. Even when gold almost hit 2000, silver couldn't get back above its 1980 peak. Whereas gold, of course, the 1980 peak was around 850. So gold went through the high. Silver, couldn't until just recently, until earlier this year. And so it's had a significant correction, which has scared a lot of people because, oh, it's down 50%. Yes, but it's still $60 an ounce. So
It's
uh,
also the third
I,
time this has happened since 1980. It's not like silver hasn't done this before. It's done it
well,
before.
actually, it hasn't done something this big. But, I was just on a show with somebody earlier today who was trying to argue that this is going to be another, decade long top. Like silver is not going to make a new high for 10 or 20 years. And the same with gold. I was like, are you kidding me? I mean, look at what's going on with the central banks right now. Look at the $40 trillion national debt. Look at how much the deficits are exploding, the net cost in interest payments, the amount of inflation that's going to be created to monetize this debt in the next 5 to 10 years is going to dwarf all the inflation the Fed has created since its inception in 1913 until today.
Yeah.
So to say that gold and silver prices are just going to stay where they are during
So
all that, while the
so
price of
that's
everything
the
else just goes through the roof?
I also wanted to ask your opinion on that because a lot of people say, well, Rafi, if what you're saying comes true and the dollar either falls by, 95, 99% from where it is now, and people who had all of this purchasing power that they imagine they have, suddenly they wake up the next morning and they don't have it.
Yeah.
That's a real societally destabilizing force. Do you think do you think the West or America can survive that kind of upheaval? And what are we doing stacking gold and silver if people are just going to be so desperate they're just going to go out the streets and steal things? I mean, what do you think it's going to look like?
Well, I mean, gold and silver at least will allow you to conveniently store your purchasing power. That's what people are doing. But yeah, I mean, this is going to be a major game changer. And the problem is the way the political parties have been moving in recent years is everybody's shifted left. The Democrats have gone full socialist, right? Where they're not in the closet anymore. They're like, yeah, we're socialists and we admit it, right? Um, and they're proud of it. The Republicans have also moved left. They're left of center. They want big government. They want government to be involved in the economy, to be involved in central planning, to be working in partnership with businesses. They want bigger deficits, more government spending, more money printing by the Fed. And in fact, interestingly enough, J.D. Vance just gave a talk at the Nixon Library, where he was praising Richard Nixon as, hey, he's a great guy and he's making a comeback and who cares about Watergate? And I didn't really care so much about Watergate. I mean, I did, but I care more about the liberal policies that Nixon pursued. And Nixon was the last, or I guess Ford was also cut from that cloth. But back in the 50s, the Eisenhower years and the 60s and the 70s, when you had the big populist movement on the left, that led, with the Kennedy and Johnson, the Republican Party was very left wing. I mean, very, very liberal in that sense. You had a small part led by Barry Goldwater
Yeah.
that was conservative. The rest of them were associated with the Rockefeller wing, kind of like Democrat light. Goldwater, initially tried to, won over the Republican Party in the 1960s.
Yeah, but he lost
Unexpectedly.
big. He lost big in the general election. No.
Yeah, but he won, and he wasn't expected to win, but he gained a lot of popularity within the Republican Party. And he got the nomination in 1964. And of course, he lost in a landslide because the public was not quite ready for that message. But in 1980, they were. After Johnson, and then Nixon and Carter, the public had enough of government from both the Republicans and the Democrats. And that message, that Goldwater message, finally resonated with the general public through a Reagan. And Reagan was a better communicator than Goldwater. I mean, Goldwater was a great man, but Reagan was able to deliver that Goldwater message in a way that Goldwater couldn't.
Well, interestingly, Peter, let me just interject for a second, then continue on this line. Isn't it interesting that Reagan captured the attention of the country almost precisely when the dollar was collapsing and gold was reaching its 1980 apex? That's when he was the most popular. That's when he got
Yes,
elected.
because inflation was a problem, and we had the misery index, high interest rates, high inflation. And at that point, the public was like, yep, I blame government because Ronald Reagan said government isn't the solution, government is the problem.
I talk about the pyramid that starts with gold and goes up layer by layer by layer, ultimately to Bitcoin. I just want to reiterate it here. That it's not really Extra's pyramid, but it's all a derivative layer pyramid that starts with gold, and then dollar was originated as a derivative of gold. It was a receipt for a certain amount of gold. On top of that, you have bank deposits, which is a promise for paper dollars. On top of deposits, you have a promise for dollars, which is debt or treasuries. On top of that, you have everything that treasuries are based on all the other debt, and it
Yeah,
keeps going,
but
going, going
just
until you get to Bitcoin,
yeah, but
right?
originally the dollar wasn't a promise to pay gold. The dollar was gold. The dollar was defined by a weight of gold. That's
Right.
actually what it was. Federal Reserve notes originally were promises to pay dollars. They were notes for dollars. The Fed had the dollars, the gold coins, and it issued notes that were redeemable in those gold coins. That's why, like, if you had a $20 bill, it said payable to bearer on demand, $20 in gold.
Right, right.
The note, and that's why it's called a note, right? A Federal Reserve note is a liability of the Fed. The Fed has made a promise to pay something. Well, what are they going to pay? They're going to pay dollars. The dollars are gold. The dollars are silver. And so that's our money. Then when, of course, we went off the gold standard, we transformed a note to pay dollars and said, well, that's going to be the dollar now. The IOU for the dollar becomes the dollar. It's like you go and check your coat at a restaurant, and they give you a piece of paper, and you give them your coat. And then when you go back to get your coat, instead of giving you your coat back, they just give you your claim check back and say, that's your coat now. That's what that's what you got.
Yeah.
I know, but you can't wear it warm. It's not It's not a real coat. It was an IOU for a coat, but maybe somebody stole the coat, so they don't have it anymore. So they just get back your claim check. That's what the Fed did. Hey, we're not going to give you the gold, but you can keep the claim check.
Yeah. So when we get to that point, right, and we're all the way up on this derivative pyramid, and we finally get to Bitcoin, which isn't even a thing. It doesn't even exist. I didn't know that strategy that which you were talking about in your last show had a derivative of a derivative of a derivative of Bitcoin on its own balance sheet or on its own business plan or whatever it was. Stretch. I had never even heard of
Uh-huh.
that. That strategy basically is going to store Bitcoin and then borrow against it to pay shareholders dividends through a preferred
Uh-huh.
thing where it's going to borrow money that it's already borrowing to buy Bitcoin, which is
Yeah.
already a derivative of Bitcoin, which is like all the way in the stratosphere of the pyramid. So what's his name? Michael Saylor. He's been
Mhm.
sailing away for a while now. He has all of these. He has all of these derivatives of Bitcoin that he's going to have to deal with very soon. And this could, just like any other thing that could prick the bubble, this I
Mhm.
think is big enough to do it. I mean, what's Bitcoin's market cap now? Like $2 trillion, and all the debt on top of that. We don't even know how much it is.
I don't even think it's 2 trillion. I think it's 2 trillion with all the other cryptos. That's the total. I think Bitcoin itself is a little over 1 trillion, like
Okay.
1.2 trillion or something like that. Then you have to throw in Ethereum and all the rest to get to 2 trillion. But it's 2 trillion worth of air. I mean, it's just on paper. It's just BS. And a strategy which is now going to be the biggest seller of Bitcoin, which was the biggest buyer, strategy spent $60 billion buying Bitcoin. Now it's going to be the biggest seller. That's going to, prick this bubble if it hasn't. I think it's already been pricked, but now it's got a bigger hole in it. And he's going to get inundated with lawsuits too, from people who bought those securities based on the material false statements and misrepresentations that Saylor made as the executive chairman of strategy, basically telling people that very risky assets were safe and they had nothing to worry about. And they bought them and they lost. And so there's a lot of lawsuits too. And that's not going to be good for the brand, for the image of Bitcoin when Saylor is the face of it. And of course, to satisfy these lawsuits, whether they're settled or they're just lost, strategy is going to have to sell Bitcoin because that's its only asset, really.
Yeah, and then the question is, what about all the other banks? I remember I have this vision of I saw it of Howard Lutnick at some kind of Bitcoin conference talking about how much Bitcoin whatever bank he was in charge of has. He's like, we got a beep load of Bitcoin. He was proud of it. He was cheering him. I mean, there's a lot of banks that have all this stuff.